Likely when you log into your 401k online, okay, the first thing you're gonna see is your balance. Maybe you like that number, maybe you don't like that number. But then somewhere again, right on that front page, next to the number, you're gonna see likely in really big red letters, you're not on track. You're not on track. These online retirement calculators, you cannot trust them, okay? You can't. I'm gonna tell you why and what you should do instead. I've got that and more coming up. So as you'd expect, we have a 401k here at Korhorn Financial Group. And yeah, it's the same features and bells and whistles as the 401ks that we offer to our small business clients. And yeah, we put a lot of, intentionality into having the right investment lineup, the right features, and yeah, we really care about it. And we've got a team now at KFG of over 100 team members. Many of them are financial planners, but some work in our tax department, some work behind the scenes, some are, more in customer service, but 100 team members, not all of them, financial advisors, financial experts. Well, every Monday morning we have a staff meeting, and once a month we've got a longer staff meeting that includes a lot more announcements. And so our team leader, fantastic individual, incredibly wise, helps a lot of small businesses, Corey Johnson, was presenting some changes going on with our 401k. And so he sort of showed, when you log in, here's what you need to do. So he logged in to a sample 401k, and yes, even on our 401k, the very first thing you see is this really big, I think it was just this sort of pie chart. It looked like this, okay? Here's an example. And it showed in big red letters, you're off track, right? You're not on track. And he immediately said, ignore that. If that's what yours says, or even if it says that it's you're on track, ignore it. It doesn't mean anything. You got to work with your CFP and do that full 5-factor analysis. And I love it. Corey was exactly right. And again, that doesn't make him wise, but yes, he's absolutely astute. He understands that online calculators are garbage in, garbage out. If it doesn't have the full picture, if it's not a full process, you cannot trust the output, especially with the biggest financial decision in your life. So therefore, whether you're logging into your 401k, you're going to see it right there, okay? Or maybe you're doing your own investments and you log into wherever your investments are and they've got a retirement calculator right there. Or worse yet, guys, maybe you're working with a financial advisor. I'm going to call them an investment advisor, and they tell you, oh, no, we can help you with the retirement plan. And they, slap together a really quick output that is sort of indicative and somewhat similar to what I just showed you. Guys, that's a result, not a process. You need a process in order to make the biggest financial decision of your life. What's that process? The 5-factor retirement plan. And let me tell you what I then later on in this Monday morning meeting here at KFG, later on I had to present some things and actually piggybacked on what Corey said, and I explained why that chart, even though we can't even turn it off on our own 401k, why that chart is there, but you really should ignore it. First, that chart knows your 401k balance, doesn't know anything else. It has no idea how much you have in your bank account, what's in your Roth IRA, what your spouse has in their retirement accounts. It does not know your entire investment savings and your entire nest egg. So therefore, how could you trust the result if it's just looking at one piece, potentially one, maybe even small account of your entire financial portfolio? Second, it doesn't know your retirement income sources. Maybe, and ours does, it might do a forecast of what it thinks your Social Security is, but if you haven't been with your company that entire time frame, you have no idea what assumptions they're baking into that Social Security analysis, but they also don't know whether you have a pension. They don't know whether you're going to have any other retirement income sources, maybe rental income, something like that. So it really kind of overlooks and under assumes your retirement income sources. Third, of course, it doesn't know when you're planning to retire. And yeah, many of them are included, ours included. You can change, 67, 65. It was defaulting to 67, by the way, but it doesn't really know when you're planning to retire, when your spouse is planning to retire as well. And then potentially the most dangerous is it doesn't know what you plan to spend in retirement. Most of these online calculators, ours included, but most of the ones that you're going to work with an investment advisor and they're going to kind of recommend as well, they're going to assume that you spend a percentage of your pre-retirement income. That's the That's the quick and dirty way for a lot of people that don't do comprehensive planning and certainly don't take a 5-factor approach. That's how they're going to gloss over the biggest variable in your retirement planning goal, period, right? Is how much you plan to spend in retirement. I've seen people retire with confidence with just a couple $100,000 saved up. I've seen people not be on track to retire when they've got a couple million saved up. What's the difference? How much they spend. How much they spend. And when you're just leaving it to a software to assume, well, yeah, you're going to spend 90% of your pre-retirement income or 70% or 80%, you have no idea the variables, the assumptions that are being overlooked in that sort of easy and oversimplified assumption. Why is this so dangerous? Well, one, that's not accounting for health insurance, healthcare. Most people, they're not paying the full amount of their health insurance, during their career, and therefore just looking at your percentage of your income. No, that's not going to cut it. This is not looking at your spouse's income. Has no idea whether you're going to have a mortgage during your career, but no mortgage in retirement, or vice versa. Maybe you move in retirement, and now all of a sudden you're going to have a mortgage. Has no concept about your taxes. Right? During your working career, you're going to pay an extra tax. That 4-letter F word called FICA, you're going to pay that during your career. You're not going to pay that during your retirement years. Plus, your Social Security is likely going to be tax optimized. Even if you're paying the maximum amount of Social Security on it, it's still going to be optimized. There's just so many variables that touch your retirement spending number. I didn't even mention inflation or inflation to healthcare, right? So just assuming a percentage of your pre-retirement income is oversimplifying and is it's just not an accurate or helpful assumption on the biggest variable of determining your retirement success. So what should you do instead? You may have noticed that those 4 gripes that I have, and actually there's a lot more, guys, 4 of those gripes align with 4 of the 5 factors of retirement. That's the process you need. Instead of just an output, you log in and you just get a simple answer, or your investment advisor says, oh no, well, here's your retirement. Just a simple answer. You need a process. And that process, like all processes, are thorough, right? It's going to look at all 5 key variables. We call them the 5 factors. When do you want to be done? And what's your life expectancy? We didn't mention that. We have no idea what these online calculators are assuming for life expectancy. You want to assume that you have a little bit of longevity. Why? Because if you're just planning on life expectancy, 50% of the plans are going to fail, which is that's not good, right? I wouldn't want to plan that way. So when do you want to be done? So your retirement age, your retirement spending, and all of those subcomponents that I just mentioned. Retirement income sources, how are you going to optimize Social Security? What are the other choices? How much total do you have saved up for retirement? And how much are you saving on an ongoing basis? I didn't even mention that retirement calculator with your 401k has no idea if you're funding an HSA or shoeboxing it or funding a Roth IRA, those sorts of things. So all that's factored in to that retirement savings. And then lastly, the risk tolerance that you're comfortable taking with those investments. Are you comfortable taking medium risk, low risk, high risk? We have no idea what assumptions are being made in those 401k or online retirement calculators. Those 5 factors, they're interrelated. These are decisions that you get to make, but then once you make one, you then stress test it, okay? And the output's gonna look very different, okay? Here's just one chart, but there's multiple charts that all sort of feed together to paint a picture that is stress tested to say, well, are you actually on track? Looking at all facets, all factors of your retirement plan and your financial situation? And if not, what adjustments do you need to make? What techniques or levers do you need to pull in order to find a plan and chart a course that's actually on track? That's the process that you need to take. And then the ongoing process, review it once a year. Make sure that those variables are accurate, and then confirm that the output is still showing that you are on track for a successful and confident retirement. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.